I think it would have to be a very ugly environment for the equity market to derail the Fed from tightening.
The taper tantrum was like 4%, and they had feet of clay.
Yeah. I think, so when they didn't move in September, it focused the markets on the kind of the growth scare. We've got some okay growth. China is certainly doing better. I think, the September environment was the markets were sort of looking for this global recession. I think things have actually improved since then. So I would be very surprised if things keep the Fed from being able to tighten in December.
Well, I think the market is probably fairly priced, but as you saw, the economic numbers continue to get stronger. They do that in fits and starts, a little bit up, a little bit back, but the progression has been clearly positive, and the bond market certainly has responded to that. And you'll probably see some increased volatility as we get closer to the Fed decision. But ultimately, it's pretty hard for stocks to go down here. Earnings are growing, inflation is low, employment is growing. Fed's going to make some decision in the next few months. And I think stocks will probably be positive going forward.
We still think that the US dollar is going to outperform against some major currencies, particularly the euro and the yen. But we think that dollar strength at this stage is having a bit of a tightening effect anyway. And we just don't think that they're going to go in December. The monthly payrolls can be quite volatile, and heading into Christmas, probably putting on a few extra people there short term, so we think they'll probably wait till the new year, but we definitely think they'll go ahead early next year.
The dollar index, I think you're right to have questions about. We probably get some more gains, but I suspect they're increasingly grinding rather than the sort of move we saw on Friday. Draghi speaks through the middle part of this week, for instance, and I think he's going to be noticeably less dovish than he was a month ago when he really kind of set those easing expectations in Europe. Euro was up near 115 then, and there doesn't seem to be any particular kind of domestic economic factors driving further easing in Europe. So we conclude there's a currency impetus there. But as you say, the euro now down below 107, down below 108, sorry. So he should be pretty neutral, I think.
I think as overall, the sentiment for financial IPOs in China has actually been quite good, right? You had China Re, you had China Huarong, and then now you've got CICC. So overall sentiment has actually been quite good. And you're also getting sort of more cyclical stocks coming through the IPO markets, because the past couple months in China has been much more focused on IT stocks, right? Because you have that MSCI China ADR inclusion coming up at the end of the month. So you look at ADR stocks over the past 6 to 8 weeks have performed very well. So this is actually quite good for cyclical stocks, because there is that demand for these cyclical stocks right now. It seems to be within this IPO market.
If you look at the valuations of the banks, for example, they are actually trading quite reasonable valuations. Multiples, forward PE multiples about 5 times, offering a 6 to 7% dividend yield. That's really attractive to us. For brokers, they would be beneficiary of this reopening of the IPO market. So definitely, as you alluded to, brokers and banking sector would be the kind of sectors and exposure that investors might want to take a closer look at right now.